Innovation in technology is one of the buzzwords on our lips today, and we've seen a lot of advancements in the transport sector, in the healthcare, financial technology, agriculture, and many more others. We know that a lot of young people are innovating in these spaces. So recently we had a conversation with United Nations Capital Development Fund, and the conversation was about how we can pay a lot of attention to this sector so we can grow our economy. But that's for later.
Welcome to Money and Markets.
The United Nations Capital Development Fund research on the digital economy came up with very important findings. And today, we dive into it as we speak to the principals.
Now, if you look at the Inclusive Digital Economy Scorecard, you find that we do very well in policy and regulation, and I think you know that very well because it is common for Uganda to be cited in policy and regulation. But the puzzling question is, if that is the case, why is the impact on the ground so low? And these are some of the issues we're looking at. And what we discover is quite interesting. So you start with apparently good policy and laws and regulation, and then somewhere at implementation level, things start to fail. And what you start discovering is that areas like, for example, skills. I think your guess about skills in Uganda is as good as mine. If you talk about the skills of the people who are supposed to exploit ICT, and we're talking about both basic skills, we're talking about digital skills, we're talking about financial literacy, the findings that those are actually very low. We talk about innovation, about which we are very excited in Uganda. And that, despite policy scoring very well and the many statements we hear about it, when you look at what is actually coming out of this, again, it is limited. So the question comes, why is that the case? You look at infrastructure, and this, I take it beyond the telecommunication structures. We are looking at how people can access services and everything. And again, access and utilization is very limited. Let's start with government itself. I think one of the challenges we still face in government is that you get policies which are not addressing the same policy objectives. And I'll give an example which is well known in this sector. You have got the Ministry of ICT and the agencies in that sector doing everything they can to bring costs down. But then you have got the Minister of Finance and Economic Planning doing everything to raise as much money as possible. So left hand gives and right hand takes away. And that kind of policy contradiction really pulls us down. That's one of the biggest challenges. So you find that taxation in this sector is really one of the highest in the continent and I think possible around the world. And therefore people cannot access these things. Look at devices like telephones. Again, the taxation is so high, most people would never afford a smartphone. And therefore, those kinds of challenges need to be addressed because until those are addressed, addressing the other things at the bottom of the pyramid become very difficult. Imagine if the entire Uganda population was digitally literate and were utilizing ICT in everything they do, and I'm talking about the farmers, so that I know what kind of soils I have, I know what the weather is going to be like next week, I know what the markets are like. Look at the overall boost to the economy, because right now, like it or not, the percentage of our population involved in generating the major part of our GDP is very small. Now, by extending that capacity and capability down to all levels, we boost that multifold. And I want to look at it like that. So instead of simply talking numbers and say that we could get so much growth in GDP, which I could do, I want us to say, what is the missed potential of all this population which is sitting doing nothing? Take education. We are still partially locked down as far as schools are concerned. Can you imagine what it would have been like in Uganda if when this lockdown came, every child in Uganda could get online and engage in education like those from the more wealthy families are doing, then the impact that feeds through on the economy would again be incredible. Once you change your perspective, the profit motivation is always there. Let me give an example. Celtel was a monopoly in Uganda for 5 years. And in that time, they brought on board 5,000 customers in that 5 years. Because their assumption was that people in Uganda are poor. They cannot afford mobile phones. And then MTN came and took a totally different perspective. They said, people in Uganda don't have phones. If we can help them to afford the phones and the services, then there's a lot of money to be made. On their first day of launching, I believe they got 7,000 customers and their switches even collapsed. So that's the kind of thing we need to bring on board. So it is fallacious to assume that people don't have money. People have money when there's value in what they are getting and when it is pitched to their level of affordability. And therefore, instead of thinking in terms of this innovation will not make money, so supposing I made this innovation and about 10 million people started utilizing it, then 10 million times 1,000 is 10 billion. But if you think that you are going to make it for just 4,000 people, then 4,000 times 1,000 is just 4 million. What we are trying to achieve with the scorecard is for the first time to give government, and when I say government, I don't exclude myself because we the people are part of government. So to give everybody some insight about missing links, because until we work on those missing links, nothing will happen. We get down to measurement because for too long we have been talking about the importance of the ICT sector. But when somebody says, so what? We don't have data to demonstrate what is possible. And therefore the scorecard is trying to translate achievement and gaps to data, which most people understand, and I know His Excellency loves that, so that then based on that data, we can start having targeted interventions which address the missing links.
MTN has finally listed on the Uganda Securities Exchange after, of course, a number of years. Now, it's joining a market characterized by a number of challenges, one of them being lackluster performance. Today, we try to put into context this environment that MTN is joining.
MTN Uganda majority shareholder, MTN South Africa, who is the majority shareholder of MTN Uganda, is offering to the general public 20% of its shares at the value of 200 Uganda shilling per share. In total, MTN will sell 4.5 billion of its shares.
As this listing finally comes to fruition, the Uganda Securities Exchange and equity markets in Uganda generally seem to have received the much-needed activity injection they badly need at this point. As MTN Uganda lists at the Securities Exchange, the bourse appears to be going through a tough stretch, characterized by low turnover and less interest from offshore investors who normally drive activity at the exchange. According to market reports, offshore investors generally shunned the Uganda Securities Exchange between March and October 2021, consider the most opportune time to invest, as it's characterized by payments of full-year dividends, release of half-year results, and special corporate announcements. Following the end of offshore investor season, average trading at the USE dropped to less than 20 million shillings per day at the beginning of October, while trading volumes fell to less than 200 shares per day. Most of these offshore investors are hedge funds, mutual funds, pension funds, and life insurance funds who traverse overseas financial markets, mainly for higher returns, and are always on the lookout for competitive financial markets. However, the promoters of the MTN stocks are convinced that the timing for its listing is good and is set to attract good activity at the back of a strong balance sheet and a firm market position. For Uganda Securities Exchange, this is a welcome move as it is set to significantly bolster the bourse's capitalization.
Currently, the market capitalization at the exchange for the 9 local listed companies is about 3.9 trillion. It's been mentioned when MTN comes on board on 6th of December, another 4.5 trillion will be added to the market cap. That would be ideally doubling the market capitalization. That is one of the benefits we'll have.
Market observers are keenly watching to see whether the MTN move will draw back the interest of especially offshore investors who are crucial at driving share prices and share trading volumes in the stock market because of their huge orders. There's also optimism that East Africa generally will continue to attract investors and that expansion of the vaccination programs for countries including Uganda will eventually pull economies out of the business crippling standard operating procedures associated with the COVID-19 pandemic. We'll now take a very short commercial break. Man and Markets continues after this break.